please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's move on. A recent Julius Baer report expects the global economic backdrop to remain a bit robust, though it does see renewed weakness in some emerging economies. Julius Baer is also increasing their equity market exposure on the back of an expectation that the bull market looks good for more. But what about India? Mark Matthews of Bank Julius Baer joins us now to talk about that. Mark, good morning. Just start off by telling us what your basic view is on the world equity markets, and then tell us how you're approaching India, given the context that we have a lot of hurdles, be it crude, the political uncertainty, etc.
I think right now we're in what I would call a summer storm. There's about a half a dozen things that have happened to discombobulate the markets. Number one, the trade war. Number two, the rising interest rates and therefore the stronger dollar. In the emerging markets, there are people like Erdogan and Turkey and Obrador in Mexico who aren't so friendly to the global markets, let's say, and a credit crunch in China. So this has all caused the thing that we're experiencing now, which is a fall in markets. And we're entering into what is seasonally a weak time of year anyway. The summer months historically are the poorest performers. So I do think that we coalesce at best throughout the summer. With regard to India, it actually looks good in this context because, number one, there is no real component of India in this trade war. India is not a big exporter and it benefits from the weaker rupee. The NPAs are being addressed. Foreign investors like that, and I think they're probably over the hill on that one. The oil price rise is not good for the country, but at least we can see the government is not subsidizing it. There was a concern that it would do that. Earnings growth of about 15% is very decent. So I think the backdrop on India looks quite favorable. The only issue that I think people increasingly have in light of the Karnataka election is what the general election might look like next year. Because what we saw in Karnataka is that although BJP got the most votes, the opposition was able to cobble together a viable coalition. And if the opposition countrywide can figure out how to do that on the national stage, then I think increasingly foreigners are worried we might not have a BJP government, and instead we'd have a coalition of a very, very wide range of parties, which would be ineffective in its governance. Okay. But at present, I wouldn't put over 50% probability on that.
Okay. Mark, good morning. So is that the bigger risk for India, or is, for example, crude oil surging towards, say, 90 or 100 a bigger risk for us?
Well, that would obviously take a bite. I mean, if we got to 90, I'm not sure. Perhaps the government might have to oblige the oil marketing companies to bear some of the brunt, and of course, if they don't, the consumer would. But I actually am not so sure that oil will go to $90. I think that what we can see now, in fact, is a little bit of weakness in the most recent economic numbers globally. And the bull case for oil really was that demand would remain very, very strong. But as a result of the trade war talk and the talk about a credit crunch in China, I forgot to mention there are concerns in Europe that Merkel may not survive in Germany. So if all of this kind of dampens business and consumer sentiment, I think that could take the edge off of oil. So I wouldn't worry too much about oil going to 90, but I think it can stay around where it is now.
Okay. Good morning, Mark. You're in Delhi. It would have been so much better if you had been in Mumbai and in our studio, and we hope to see you sometime soon in the studio itself. But in India itself, are you hands-off India at this point in time and just biding with the investments you already have? Or are you dipping in? If yes, in what sectors?
Well, I must confess that we haven't really changed our allocation in this market for a long time. It's a structural overweight for us. It's a buy and hold market. And think that the case is very simple. It's a large emerging market with a good growth trajectory and well-run companies. So it's worth buying and holding that kind of market over time. If I could speak more broadly about foreigners, I think what's encouraging is that they've sold only about $1 billion worth of Indian equities so far this year. If you remember 10 years ago during the global crisis, there were massive outflows from India, and we're not seeing that this time. And in fact, I'm noticing that there's been quite a bit of foreign appetite for some of these recent IPOs like Rights and Varroc and Bandhan Bank. Yeah. So actually, I think the foreign appetite for India, it's not going to increase, but I don't think you're going to see a mass exodus from here either. Maybe a little bit like what I said about ourselves. We'll just stay put.
Okay, that's interesting that you mentioned Rights and Varroc. I mean, you know, that's drilling it down to the micros. But since you are in India, any interesting companies, managements, corporates that you've been reaching out to, anyone you've met recently, any themes that you like, that, you know, you think could do well in the long term?
Well, I must confess, I arrived late last night. I just had my idli for breakfast, and you're the first people I'm talking to. So I probably should have talked to you 3 days from now.
Okay. You're most welcome to speak again, and we will try to see if you can find some time for us. But what is the incremental interesting story in India? You spoke of Bandhan Bank. So would, you know, NBFCs and private sector banks, besides the one that are, of course, well priced, interest you?
Absolutely. No, I think the banking sector is a good sector to be positioned in here. As I said, I like the way this current government has approached the NPAs. They need to be resolved. It's painful in the short term, but of course it cleans up your balance sheet so then you can do more lending long term. So I think the banks are a good place to be. The consumer remains a good place to be, and even some of the big and expensive infrastructure companies like Larsen & Toubro, I think are actually not too expensive based on their earnings profile and the results that we've seen in the most recent quarterly period. So there are a lot of things that are worth owning here.
All right. Mark, thanks a lot for joining us. Have a good trip in India, of course, and we'll talk to you soon.